Man, oh man, we got to talk about GameStop. So last night on July 6th, Wednesday, we got the news that GME is going to go for a stock split, but it's technically a stock split through a dividend. And I want to get into the whole storyline and what this all means because I see a lot of questions and a lot of misinformation. So let me quickly run this down for all of you. June 2nd, GME shareholders approved new shares to the tune of 1 billion shares. Right after that, we got this interesting article. There's an interesting detail in GameStop's stock split proposal. The stock split option in the form of dividend shares consists of a slightly different mechanism than a normal split. Each GameStop shareholder will receive one more share as a dividend. So in addition to a stock split, shareholders will also receive an extra dividend share. Now, this came out right after the vote, but not with the recent news. This was posted a little bit before, so we didn't know the ratio or anything at the time that this article was written. It gets a little bit more complicated even from this, and I'll do my best to get into what all this does mean and doesn't mean. So as you can see here, this is the official SEC filing, July 6, 2022 from GME. On July 6, GameStop issued a press release announcing that its board of directors had approved and declared a 4-for-1 stock split in the form of a stock dividend. This is the mechanism that's a little bit different than normal. Usually, it's a straight up stock split. And this is one of those things where semantics and technical detail actually matters. A lot of the people in this world, this has happened before. It's not like GME is the one that's created this. This has happened. And a lot of the time, people don't care because functionally at the end of the day, most of it is the exact same, as in you end up owning more stock or less of a price. So your money amount doesn't really change. The best example I have for this is instead of owning, we'll just use a different one, but a $20 bill, you would now have $21 bills. So you have more bills, i.e. more shares, but the same amount. It's not changing the market cap of the company. So your dollar amount is the same. You just own more shares at less price per share. So that happens with a normal stock split and also a stock split in the form of a stock dividend. Now, to get into some of the semantic differences here, when you do a stock split for a stock dividend, that requires the approval of these extra shares. And that's exactly the billion that I was just alluding to. That was functionally necessary for a stock dividend. They had to have it to be able to disperse it in the form of a dividend payment. Remember, dividend payments aren't just cash. It's just something you get paid for owning a stock on a certain date. It could be anything. It could be cash, or it could be a dividend, or probably whatever they really want to do as a company. Normal stock splits, they don't need that extra stock. It's just everything is multiplied and divided appropriately in terms of the stock. So a little functional difference. And for most people, for most stocks, for most markets, it doesn't really matter, this nuanced difference at the end of the day. But in this particular scenario, it might, and I want to explain that. But before that, I just want to give you the dates of all this stuff. Each company's stockholder of record at the end of business on July 18th. So this is the ex-dividend date. July 18th at 4 p.m. If you own the stock, you will be part of the 4-for-1 stock dividend. So they're going to basically do a snapshot on business close on July 18th, and then it'll officially go through at the end of trading on July 21st. So you'll see the change in everything as of trading on July 22nd. So the important dates are basically July 18th and July 22nd. The start of trading on July 22nd is when you're going to see it. Now, obviously, this was just announced, and on the news, people really liked what they saw. I mean, GameStop ended up closing at 117.43 and at one point shot as high as 131. Now, you might be thinking to yourself, well, why does that make sense, Matt? You're telling me that the market cap's not changing at all, that the money value, there's no difference there. Well, most of the time in a stock split, I agree with you. There are some psychological things of people just because they see less of a price. It's a psychological impact and they just think that it's cheaper. So they're going to buy more. They feel like they're getting a deal, even though the market cap's the same. You could argue that functionally there are legitimate changes in the options market. For example, it's way easier to get options of an equity when it's of a lower value in its equity price. Options are more affordable. So yeah, you could argue that. But in this particular one, this is where I personally still have some questions. So I want to share this all with you. I'm very familiar with stock splits. Stock splits in the form of a stock dividend is now where you're throwing a wrench into the entire situation. This is from Investopedia. Investors short a stock are never entitled to its dividends. And that includes those short a stock on its dividend record date, which in GME, that would be July 18th. It's also called the ex-dividend date. Rather, short sellers owe any declared dividend payments to the share's lenders. Once again, this is very, very important. Rather, short sellers owe any declared dividend payments to the share's lenders. Now, if I'm being completely frank and honest with all of you, this is something I am not the most aware of. I'm not that absurdly confident because I understood this of if you're short a stock and they pay a cash dividend, well, the short has to pay the dividend to the right party. I don't know if that is also applicable to stock dividends. I know it's very applicable to cash dividends if you're a short. I do not know if it is applicable to stock dividends. It very well may be. And now the question is, the fact that they went through a stock split in the form of a dividend opposed to a normal stock split, is this now going to make all the shorts, which there's currently a decent amount of them right here. The short interest is almost 21%. Is this 21% of short sellers, are they now on the hook for the financial nature of all the new stocks that they would have to pay? And that's my current question of the scenario. I reached out to many people who are going to be highly informed about this. And as soon as I get a concrete answer, I'm going to share it with you. But I just want to let everyone know my purpose in kind of doing this a little bit of a monologue here is this is a little bit more different and a little bit more complicated than a normal stock split. And this comes back to why semantics actually matter, why technical accuracy is very, very important, because it might lead to a little bit of a different fallout than we expect. And just before the bell goes dingity ding, 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 big short investor Michael Burry pokes fun at GameStop. Not the biggest fan of the stock split, like obviously just kind of making fun of it. GME should have announced a 40-for-1 split for old time's sake. The investor of the Big Short fame is likely skeptical about the upcoming split, which promises to lower GameStop's stock price and make it more accessible to retail investors. Burry has warned meme stocks will inevitably crash, and GameStop shares are still up about 500% since the start of 2021. So like a normal stock split, it's going to come down in price, but you own more, so your amount of money is theoretically going to be the same. He labeled the saga unnatural, insane, and dangerous. I just thought that was a funny way to describe the whole GME craziness. Unnatural, insane, and dangerous. So obviously, there's some people who are still very much outspoken against it, but I, for one, am excited to see how this all plays out.